Wall Street retreat. US equity funds suffer sharpest weekly outflows in over a month. US equity market witnessed their steepest investor exodus in 5 weeks as caution dripped Wall Street amid soaring valuation and intensifying geopolitical turbulence in the Middle East and Ukraine. According to the data released by LSEG Lipper, investors withdrew a staggering $10.44 billion from US equity fund in the week ending September 10. The sell-off came even as the S&P 500 surged to a record 6,592.89 on Thursday, buoyed by expectation that the Federal Reserve will execute 3 interest rate cuts this year. However, the index's forward price to earning ratio of 24.33, well above the decade-long average of 19.38, raised red flag about overheated valuation prompting profit taking. Large cap equities bore the brunt, facing withdrawals of $18.22 billion, the heaviest outflow since June 18. Mid-cap and small-cap funds also suffered losses of $912 million and $442 million respectively. In contrast, sectoral equity funds bucked the trend, attracting inflows of a third straight week. Technology remained the standout performer, drawing $3.42 billion of the total $3.77 billion sectoral inflows, underscoring investors' faith in the US tech resilience despite broader market jitters. Meanwhile, bond markets continued their bullish streak, recording $8.61 billion in net inflows, the 21st consecutive week of positive momentum. Government and treasury funds pulled the $2.37 billion, while municipal debt funds saw their strongest demand in 3 weeks with $2.18 billion of new allocation. Money market funds remained the top heaven, garnering a massive $40.05 billion in fresh inflows, marking their third successive week of investors' preference. The contrasting flows reflect a market at a crossroad, enthusiasm over anticipated Fed rate cuts clashing with unease over inflated valuation and global instability. Analysts warn that unless earning growth catches up, US equities could face further correction in the weeks ahead.